I want to begin by asking you that overall credit card business momentum in July was quite strong. Overall for the market, it was up around 1% in terms of issuances. What is the kind of penetration and distribution that you see for your own business here?
Yeah, good morning. Let me start by saying that the credit card proposition which we have started is basically with the objective to cater to the digitally savvy young customers. You know, we have been focusing on increasing our customer base, and since it's an institution which has a long vintage, we have a lot of loyal customers who can be offered a good proposition of credit card. Apart from that, we are also targeting new, young, digitally savvy customers. So the entire arrangement is basically for tying up with a fintech, and where we are going to have a tie with them, through which we are offering cards with Visa cards, which are Visa signature cards, which will carry our brand, and it is offered for digitally savvy customers with the entire fulfillment happening through digital. So the underlying objective is to basically offer the best-in-class credit card for our customers and for new-to-bank customers. So we believe that by offering this proposition, we'll be increasing the customers' product suite for our existing customers. At the same time, we'll be attracting a lot of young, digitally savvy customers, through which we will be able to use our other product offering from the bank through cross-sell, etc. That's the plan for us.
Mr. Ramakrishnan, morning. Rima here. So that's the rationale. In the month of July, you've distributed 98 cards. What's the equivalent number for the month of August? And again, is there any target that you've set in mind?
Yeah, we have actually issued, as of now, we have issued about 2,500 cards. And what we are planning to do is we are starting the entire issuance for our existing employees to start with. Then we'll be offering to our existing customers. We have already done the pre-work for arriving at the pre-qualified cards for our existing customers. We've got a big chunk of customers who are qualifying for the credit offering, and we'll be gradually scaling it up by offering to existing customers, and then we'll start issuing the cards for open market. So the plan is to start with employees, where we have already done 2,500 cards. We are continuing to issue for our existing employees. Then the pre-selected customer base, through which we have a sizable offering which we can do, and then we will scale it up for open market. What we are planning to do is maybe in a month or so, we'll be making our cards available for open market also.
And this pre-approved customer base, how large is it for you? And in terms of the potential opportunity?
We have more than 6.5 million customer base, and of course, we'll be using bureau data, etc., to arrive at the eligible customers. As you know, credit card business, all said and done, it's a business which is which has risks and which has can offer good returns. So we'll be using our own credit norms to pre-select customers who will be eligible. And as we gain more and more experience on this, we'll be offering it to more and more new, existing customers as well as new customers.
How are you going to manage the risk? Because at a time when the stress in the industry, as well as your company, is fairly elevated, as you pointed out, credit cards is a risky business.
So the way we are, in my view, risk can be managed, and if you have your offering properly designed and you use all the tools which are available today. What the bank has been experiencing is, to some extent, the impact of the COVID as well as the legacy issues with the bank. And as I'm talking to the incremental customers who we are onboarding across all businesses, we are ensuring that the riskiness of such customers are managed very well. As far as credit card is concerned, today, with the kind of tools we have from Bureau and with the kind of liability data which we have, as I said, we will be offering first to the existing customers, so about who we have extensive track record of them and their liability track record with us, and we know what kind of usage pattern they have, what kind of money do they keep in their account. So we are using analytics to pre-qualify these customers, and therefore we believe that these risks are definitely manageable, and we are very comfortable with that. And as we offer this product to open market, again, we'll be extensively using data analytics and bureau data, and this is where our partnership also comes in handy. Yeah.
So just since we have you with us, if you could just give us a sense of what the current business environment is looking like, which segments are currently under stress for you, what is the current loan growth, has there been any uptick that we can expect in your net interest margins, which were at an 8-quarter low in the prior quarter?
Okay. In terms of the quality of the portfolio is concerned, as I said, we have been incrementally adding a lot of customers across all product segments. These are all in terms of risk, they are good customers, and in fact, our growth in corporate book, where we are rejigging our portfolio, we have been adding predominantly A-rate and above customers. Even in terms of our retail offering as well as MSME customers, we are looking at lending to those customers who have excellent track record, and we are extensively using our bureau as well as our own analytics to pre-select customers to who we want to lend. And we are seeing good traction happening right from second half of June onwards. And what we are witnessing is July has been much better than June, and August has been far better than July. And we are hoping that the market has started reviving. But as far as the net interest margin is concerned, I must tell you that market is actually experiencing really very, very predatory pricing, definitely in the marketplace, with large banks as well as many other banks offering rates which are, in my view, not very sustainable. And as I'm talking to, we are looking at SME customers being offered 7.5%, which in my view is definitely not a sustainable rate, but probably because banks have surplus and therefore they are wanting to deploy this at all costs. Therefore, you are finding the margins to be really suffering in the marketplace. So as far as our NIM outlook for our bank is concerned, we believe that with the new offering, with the new customers coming on board, and with existing customers getting retained, where we need to probably come down on rates, I expect NIMs to be hovering around this. Probably we'll be seeing a little bit of uptick when our composition of retail book is little higher than what it is today. So with the more and more personal loan getting offered, with more and more auto loans coming into the marketplace, we believe that the rates can slightly go up. But in terms of stress, definitely retail and SME are going through a lot of stress due to COVID. So I believe that NIM outlook for the industry as well as for us is not going to be anything great, considering that the markets are today witnessing rates which are unheard of today.